Hello, trading is closed on October 27th, 2021. It's my trading plan for tomorrow, October 28th. Please remember I can be completely wrong and all trades should be at your own risk. Look for the pattern with the early low. Pattern tends to have an early low and a late high, so we got that. Tends to be a positive pattern. When it's negative instead, it should lead to lower prices. Now we did say, here's what we said before, that we thought the rally might stall for a few days. And for one day at least, it certainly has. We also thought we might be able to hit our target of 45.51.26, particularly if we opened down. Well, we opened up and we didn't miss it by much. We missed it by 40 cents, but that's not within the tolerance of the system, so it still counts as a miss. And we'll add this onto the list. I still expect it to print at some time. During the day, MEJT gave an ultimate sell signal but an optional higher target. The ultimate sell printed. System said it was false. Price would retrace. The optional higher target also printed. Buy signal happened in the afternoon. Just means there is a higher target. Printed immediately. There's resistance over the target. Resistance doesn't have to hold, but here it did. The ninth day of DeMark's setup doesn't have to be the end of the leg, but often it leads to a pullback of sorts. The monthly combo sell signal shows we're quite overextended in his work. Now, he came up with this in the 1970s, and for years when you got one of these, particularly on the monthly chart, it showed the market was quite overextended and there'd be a drop. Well, we've had signals like this, and instead of dropping, we've had a consolidation rather than a drop to work out of the overextended condition. These things can always fail, but if it worked, it certainly implies that we're overextended and aren't going to have a huge rally coming up. Should either be a drop or consolidation over time. There are a number of things not to like about today's action. There have been a number of possible tops in the past, but as far as I can remember, all the drops from the highs were corrective three-wave structures. This is the first time I can remember you can clearly count it as a five-wave impulse. 1, 2, 3, 4, 5, 1, and this could be, 1, 2, 3, 1, 2, 3, 4, 5. This could be over because I could count that as 5 waves down. You're right near support. You could say with a wall into the close, we could gap up tomorrow. Futures are up, and that could be the end of it. But if this is just a brief pause in the long-standing rally, you really wouldn't want to see a five-wave structure. I mean, you could have an A of an ABC could be a five-wave structure, and maybe that's all this is. But it would certainly have to have the B and the C before the rally could continue. When you've got a five-wave structure down, I wouldn't be looking for an immediate resumption of the rally. And that's not the only problem. Here was the new all-time high gapping up. The next day, you not only close under all these highs, but also under all these highs of the prior consolidation. 1, 2, 3, 4 highs, and even under some lows. That's a rejection of the high. Could still be invalidated. What you have to do is promptly overtake today's high. But for right now, it's an invalidation of the breakout to a new high, and usually leads to more of a drop than we've seen. Well, this was my old count. It doesn't break any rules, but I think it's a bit forced. And I've always said it wasn't the only count, so let's look at some other possible ones. If they had say, you could count this as B and this as C, and what makes it appealing is you have an ABC, and wave A is exactly equal to wave C, and waves magenta A and magenta C have a perfect Fibonacci relationship. Now, frankly, I don't think the rally's over. This isn't a very common percentage for wave C, but it doesn't break any rules. And there's nothing that says that C can't be equal to A, and we have a lot more coming. But at least there's Fibonacci resistance right at the high. Now let's focus in just on the drop from the September high and see what's happened since then. You have your B, different structures here, different degrees. This was B of the smaller degree. That ended wave B. You can actually count this as A, B, C up, with C equal to A, right at the high, and all the fibs work. So we have a count that works. We have a DeMark sell signal, which we'll take with a grain of salt. We have a rejection of the high. We have a 5-wave structure on the decline. And we showed yesterday there was a strong linkage on the square of 9 to some very major lows going back to last year in 2009. So put all these things together, and I'm now thinking that a correction here might last more than just a few days. Thursday's pattern has the early low. It could still gap up. Today's normally bullish pattern was negative. Instead, if we gap and promptly overtake today's high, that would vitiate the negativity. Otherwise, it should see lower prices. The longer-term picture isn't as clear to me as I thought it was. I've been expecting a brief decline followed by resumption of the rally, but this decline from the high is a 5-wave impulse, implying if the rally is to continue, it should have more work to do. In addition to the potential high from the square of 9, the monthly DeMark sell on the wave count, we now have a prompt rejection of a new all-time high. Bulls need to reverse today's action promptly, or we could be in for a decline well worth trading. Now, we do have a wall into the close, and it often leads to a gap up the next day, but here it actually could be part of a 3rd wave down. We're not going to know till tomorrow if either of those things happen. I mean, if this is a wall and you promptly gap up and overtake these highs, all is forgiven. There's probably some other way to count this. You could talk yourself into this being an ABC. But if this is the start of something big, we could be in a 3rd wave down. And it's something I'm willing to consider at this point, and the picture should be a lot clearer by tomorrow. So look for lower prices tomorrow. It's possible to negate all this and validate this, but if the decline's continuing, it could be more serious than I had originally thought. And that is today's call.